don't negotiate your discipline. Whatever you do, don't get FOMO, right? Fear of missing out. People get it. It's fatal. There is no cure. And if you get it, you're done.
Today, we are speaking with Ken Gee. He is the founder of KRI Partners. So, 45 employees. He's raised $60 million, $200 million in deals, and 14 of them have gone full cycle. So, involved in over $2 billion in multifamily acquisitions experience. So, he's helped hundreds of investors create wealth. And he's also previously a CPA as well at Deloitte. And so he brings a wealth of information. He's a family man as well. And Ken, just really looking forward to the conversation here with you.
So am I. Thanks for having me. I appreciate it.
Right on. Well, uh, currently, right now, to start maybe a little bit where you from, and a little bit about your backstory. What got you into real estate?
Yeah. So quickly, I grew up in Toledo, Ohio. Went to undergrad there, University of Toledo. Got my finance degree. That prepared me to be a commercial lender for 5 years at a regional bank, PNC, what's now part of PNC. While I pursued my master's degree at night at Case Western Reserve, that prepared me to be a CPA. I wanted to be that guy that everybody consulted for advice, right? And that's where I picked up most of my transaction work was at Deloitte. I mean, I worked in the private equity side, transaction planning, due diligence on the tax side. So it was really cool. But that's when I realized I wanted to be in real estate. So I need you to rewind the clock like almost 30 years. My daughter was an infant. I used to do her 3 a.m. feeding, and that's really cool, right?
Yeah.
But the problem is, it's not cool because it's 3 a.m. and that was the best I could do for my family.
Mm.
And that at first it was cool because it's just her and I. And if you have a daughter, I mean, it's like they wrap you around their little finger, man. That works until you realize it's 3 o'clock in the morning and you did everything right, and you just realize your whole family's going to grow up without you because you're too busy working as a CPA. And that's, I mean, I was around so many people that did so well in real estate that I had to take some time and figure this out so I could take control of my life, and that's what I did. Took me a year and a half, but finally bought 3 deals, small deals, and sold them 3 years later and made $500,000 and thought, "Oh, I cannot believe what just happened to me," at a young age, and, now the rest is history. I just start doing deal after deal after deal. It's all we do now.
Right on. So take us back to the very first deal. So you're getting out of you realize, okay, this something has to change.
Mhm.
I'm working like a horse as an accountant and I want to get into real estate. What said to you real estate's going to be the vehicle that's going to help me, get out
Yeah.
of this quote unquote rat race? And what was that first deal? What did that look like?
Yeah, so when I spent 5 years at the bank, I did commercial lending. All my customers are in real estate, and I got to know how much money they made because when you're their lender, you get to see a lot. And, then I went to Deloitte, and the Cleveland office of Deloitte had a massive real estate tax practice. Like, if I told you who our clients were, you would know their names. They are household names, and they had done extremely well. So I've just been surrounded with people that had made a lot of money in real estate, and so that's why I migrated to real estate. Now, so I spent a year and a half, and now rewind the clock. There's a lot of seminars and conferences and educational programs now to help you figure it out. Back in the mid 90s, there was none of that stuff. So I went to apartment association meetings, tried to stay awake, networked with the guy or gal in the front of the room that day speaking, because I figured if they were in the front of the room, somebody put them there because they must know what's going on. So I went through this year and a half process of trying to figure it out. Finally took the leap and bought a 28 unit property. I'll never forget it. I borrowed my half of the down payment. I convinced my in-laws at the time to go in on the other half. So we were 50-50 partners. And I got the seller to take back a note for 10% and finance the rest. And, everything that happened back then, I mean, it was I would tell you I'm lucky because I thought I kinda knew a lot, right? You're a CPA, you're a lender, you
Yeah.
you know it all, right? No, you don't. You don't know anything. And so that first deal turned out, I just learned a lot. Got to learn what value add meant, how you actually make money in business. You actually have to increase the profitability of the property. I learned, every deal you learn a lot. But I finally was able to close that deal. And as soon as I did, I do remember trying to close that deal. I don't know if you've ever been stressed out enough to have, like, what feels like a golf ball in your throat,
Yeah.
but I did. I mean, that's how crazy stressful it was. I wasn't used to risks like that, right? I mean, if I signed personally on the note and if it went under, well, guess what? I just bankrupted myself, right? So I was stressed, but after I got the deal done, every single deal, every single minute in that business just got easier and easier because you learn more. And deal number 2 was a lot easier to do. Didn't ha it has its stress points, but nothing like the first deal.
Mm. And what do you think uh, is the number one contributor to adding stress with these types of deals for you?
Yeah, back then it was 'cause I was I was a risk-averse guy. I just risking everything. I mean, I was signing on a $460,000 mortgage. That just
Yeah.
was insane, right?
Yeah.
It's not now. So now fast forward, what hurts people now? It's the knowledge. So
Mm.
you get confidence when you know what you're doing. And when you legitimately know inside, I got this, I understand this, I know how it works. Your stress level goes down because your confidence goes up. And back then I did a lot of work to try to learn, but this was just the resources just weren't there to really learn it. So that's what it was back then. It was the not knowing, the I don't know what's around the corner problem. And today, when I watch people get into this business, it's similar, except they have solutions because there's these conferences and education programs everywhere.
Got it. What do you think were you did those first 3 or 4 deals there? You went full cycle, you sold them. What were some of the biggest lessons that you learned in the early days for you?
Yeah, so on that first deal, I'll tell you how I figured out what value add. This is kind of embarrassing because now it seems so obvious that I like, how did I not know this?
Well,
But
the listeners know. I mean, listen, it's interesting because we've all that's the hidden secret is that all entrepreneurs they all have kind of their early early stories. So it's like I'm kind of a little bit embarrassed to share this, but
yeah,
this is the good stuff, right? So I appreciate
it
you
is.
opening up.
Yeah, yeah, no, and it is. So I got now remember, I'm working at Deloitte. I'm in a cube. Everybody's around me, and so I got to do this really quiet, right? So I bought this building, and I found this older lady that lived on site. She was going to do all the leasing, so she sends me the application. I run the credit because remember, I was a lender. I knew how to do all that stuff, and I see bad credit. I see evictions, and I thought this isn't good. Like I can't get good people to live. Why? Why don't I have any good applications? The rent was $415, okay? And it included heat. I mean, you can't make this up. So, I don't know, I started talking with people and I met this lady named Karen. She was from the Shaker Heights Pro Integrative Housing Service, crazy agency. But she said, "Ken, let me meet you at the property and I'll tell you what I think." I said, "Oh, okay." Like, I didn't have any very good expectations. I met her at the property. She walks in, she says, "Ken, this building was built in the 30s. The kitchens are built in the 30s. Nobody wants a 60, 70-year-old kitchen. Like, this is you've gotta make this nicer." And I thought, "Karen, I just spent I spent every dollar I didn't have to buy this place. How in the hell am I gonna get money to fix up this kitchen?" She
Right.
says, "Well, you're gonna have to." I said, "How much?" She goes, "You're probably gonna spend 5 grand." I said, "Okay." All right. So I borrowed 5 grand on my credit card and did the kitchen and sanded the hardwood floors. I paid someone to do it. Obviously, I didn't do it. So I put that unit on the market for 599. First app I got was from a Case Western Reserve grad student. Great credit, parents ready to co-sign. I thought, "Oh my goodness, I just figured out what value add meant." I
Hmm.
also learned that if your rent is too low, the wrong people will be attracted to that apartment
Mm,
because the better people aren't looking for $400 rent. They're looking for
right.
something that made more sense for what they're expecting it to be. So just that one thing, I learned
Mm.
value add. I learned about why your rents have to be in the where they should be, and that lesson. I mean, obviously, that lesson, that value add lesson, has been massive. I mean, that's how you make money in this business.
Well,
And
100%.
Aaron taught it to me.
Interesting. That's such a good story. It's for the deals that we do, we kind of see ourselves as like detectives, going in and like who can find the where's Waldo type thing. Like
Yeah.
where's the hidden value that we're not seeing here because it's somewhere we just need to find it. And
Mhm.
so That's where, I mean, geez, I mean, as you know, with the multiple, I mean, if for every $100, if you can on a 5 cap, you can increase the value by $24,000. That's all of a sudden that that's significant. And this,
That's a
we're not
lot of
talking about
money.
small change, right? We're talking about like this is a game of like high stakes. So the value add, I mean, I fell in love with it as well when you start to really hone in. But you know, it's a great story of how you stumbled upon it, and how you stumbled upon it really early in your career as well is a major gift. I see.
Yeah, I got lucky. Deal number 2, learned something totally different. I know you didn't
Yeah.
ask, but
No,
deal
please.
number
Yeah, keep
2,
going.
I had to figure out how to finance these improvements now, 'cause I remember I wasn't rich. I didn't have this $100,000 limit on my credit card.
Yeah.
Right? So how am I gonna finance it? Well, now I figured out how to get the lender to help me finance it. That was
Mm,
lesson on deal number 2 that really changed the game for me. We told the lender we could get X amount more in rent. I don't remember the number now. And so we spent 2 or 3,000 bucks, and so the lender, after I moved somebody in, so I had to meet with her at the property. She would inspect the unit. She would see the leases, see invoices, what I spent. And so if I spent 2 or $3,000 and got the rent that I promised, they would disperse like 20 grand. I was like, this is craziness. Spend 2 to get 20. I like that. It was a self-fulfilling refinance, so to speak, right? I mean, that's a massive lesson to
mm.
learn on deal number 2, because now, see, I wasn't stopped. At least I didn't think so at the time. I can finance my own improvements and just keep this flywheel moving. And all of a sudden now I've got no money left in the deal because the lender refinanced me out over time.
Interesting. No. Do you have a third lesson here? This is
I
great.
do. Do you want
Yeah,
another one?
I wanna keep it coming. Yeah.
Yeah. So here's the
Yeah.
third deal. And these are true stories. These are not exaggerated. So third deal, beautiful property named Ludlow Gables, 22 units in the Shaker Square area. It was bought by the development corp because it was almost condemned, and their development corp's job is to rejuvenate things and then not hold it. They have to sell it. So they did a wonderful job in this place. And then they picked 5 people that own properties in the neighborhood and said, we're going to offer it to you 5 and you 5 only because we like you. We think you're going to further our objective, right? You're not going to run the place into the ground. And they said, but here's the thing, your offer can't be below 700. I said, "Oh, okay." So I offered 715. I didn't win the deal. The guy above me offered 7 and a quarter, but he bailed on the deal. So then they called me, "Hey, you're number 2." They literally were just this objective. I'm like, now that looking back, I mean, they set the price, but it was way too low. So I went to the property. I'm like, there's nothing. This guy backed out what I consider to be a foolish reason. So now, how am I going to find his property? Because I'm not rich. Clearly,
Yeah.
I'm still not rich. So now this lesson is about who you know. So remember, I said I went to those apartment association meetings, got to know the guy or gal in the front of the room. Well, I happened to have gotten to know this gentleman. His name is Gary. Everybody that knows my world, you got to find your Gary, right? So we're developing a relationship. Later on, we become partners and make millions of dollars together. But we weren't to that point yet. He said, "Ken, let me make a phone call for you." I said, "Okay." He calls me back. He says, "Ken, I want you to call this guy named Phil." I'm not going to use his last name. And he works for blank bank. I don't want to name the bank. And he said, reach out to him. He's going to hook you up. I said, "What do you mean he's going to hook me up? I don't know what that means." He goes, "Just call him." I said, "Okay." So I called him, and Phil's like, "Okay, what do you got going on?" I said, "I got this deal for 715." I said, "But here's the thing. It's been appraised at 1 million." He goes, "It is? Okay. I'll do the whole deal." I said, "Well, what do you mean you'll do the whole deal? Like, how much will you lend me?" He said, "All of it." I said, "All of it? Are you kidding me?" He said, "Look, all I care about is I have a 70% loan to value." And I do.
Mm.
So I bought the third one with no money. These are true stories. So the third lesson is it's about who you know. This business becomes a relation. Life is a business of relationships, right? You know that. It's about
100%.
forming these solid. I mean, Gary, because of my relationship with Gary, Gary had a lot of credibility with this banker, who then, because Gary introduced me to him, right? I go in with cred much higher than I should have, and that's how we got the third. That's how I got the third deal. Every deal is so different, but you can see early on, this was 27, 28 years ago. Like, you remember every detail because they're just so significant and life-changing when you're able to execute on them.
Now, how much have those 3 lessons been an impact in your career? I mean, currently right now, you have 45 employees, you've scaled the business up right now. How has that impacted your basically your pathway to, where you're currently at?
Yeah, everything. The value add thing, I mean, you have to add value in the world. You just do. All right, so that stuck with me. Number 2, how to finance deals, that stuck with me, but that lesson was really, really learned with the '08, '09 recession, the financial crisis. Then I really understood that back then, from that experience, right? We didn't lose any money, we didn't lose any buildings, but you learn a lot. And then the third one was about the relationship. And every one of those things are with me today. You have to, right? You have to know how to finance your deal. You have to. We've raised a lot of money. That is relationships. And I mean, because of my relationship with Gary, we ended up doing many deals together. He's now retired. We still own one deal together, but we made millions of dollars together. And it's always about relationships. It just is. You think you can't do this real estate thing by yourself. It just costs too much money. It's very capital intensive.
For sure. And what I've realized is that everybody has a superpower,
Mhm.
and the especially the larger deals that you take down, you need a village to be able to take them down so that you don't miss something, right? And otherwise, I mean, you're an extreme unicorn if you can do it, but to do anything long term, because this is a long term game. This is not a 6 month sprint. This is like you're running a marathon with these. So you need the infrastructure for sure and the relationships. That's a really good lesson. Now, curious. So you've been through the 2008 financial crisis, right? Obviously, real estate took a pounding at that point. So and you went through that, and so I'm curious. What are some of the kind of lessons that you pulled out of to be able to make a your real estate investment more resilient,
Yeah.
to be able to get through the potential? I mean, I would say that in today's market, looking back 2008, I mean, there was overbuilding happening. There was like free money that was coming from the skies, and there was like a huge boom. And so, if you learn the lesson from that, I think if you apply those lessons in today's market, you're going to be pretty good. I think so. What would be some of the key lessons that you pulled out, and how to position a portfolio to be able to weather the bad storms?
Yeah. Yeah. So it's about discipline, and that I probably miss some deals because I'm disciplined, right? My team makes fun of me because my message is don't negotiate your discipline, and whatever you do, don't get FOMO. Right? Fear of missing out. People get it. It's fatal. There is no cure. And if you get it, you're done. You're toast, right? So I learned to not do that. The CPA and the conservative nature always made me be conservative. So what are the lessons? Number one, you got to if you think you have a 3-year time frame on your deal, well, that doesn't mean you put 3-year debt on your deal because all the stars have to line up. And if one of them gets out of whack, now you got a problem. So
Yeah.
that's the number one thing that made people lose buildings then and are doing it now is they didn't manage their debt properly. They felt like I'm only holding this 3 years, I'm only putting 3-year debt on it, or I'm only putting a 3-year rate cap on it. Don't do that. You've got to plan for problems. Number one. Number two, you can't buy unless our model is we want to be close to even leverage and have 2 to 300 in upside. Well, of course we want upside, but the upside has to be there today. Like if I look at the market and all the comparables and the ones above it and below it, I have to believe that I could walk in the door and raise rents $200 to $300 on day one. Why do I think that? Because we don't know what's coming. We don't
Mm,
know that insurance is gonna go up. We don't know that the Fed's gonna raise rates 500 basis points. We don't know a lot of things. And the way to solve problems in real estate is to increase cash flow, right? For obvious reasons. So many reasons. It solves so many problems. So now it's that discipline, right? If it doesn't come close to even leverage and it doesn't have any upside, then we just don't do the deal. But it's really hard for a lot of people when everybody around them is getting deals, right? That's when FOMO kicks in. That's worse than COVID because it's really hard to not catch FOMO. So that's what we haven't done. So you got to manage your debt maturities. You got to make sure you're disciplined. And then if the market goes against you, you just have to make sure you don't over leverage your deal because you just got to wait it out. Even in, I'm talking to you from Cleveland, all our deals are in Florida, but even in Cleveland, we weren't in Florida at the time. Even in Cleveland, you just got to wait it out. Let the market come back because it will come back. The reason I love multifamily is I can't figure out how to make it go away. Like if you don't need a place to live, then the last thing we're worried about is money, right? So I like that, right? I just know you just got to let it go. Now, unless you're in a terrible market and it's declining rapidly, that's different. But most of the time, you just have to be able to hold on. It will come back. When you're in the middle of it, doesn't feel like it, but it will. It always does.
Can you elaborate for the listeners what you mean by even leverage?
Yeah. So if debt right now, as we're doing this, is about 6% plus or minus, depending on your deal. So you don't want the cap rate to be 4%
Hmm.
because that's too low. You don't have any money left over for your partners, right?
Yeah.
So now think about this. There's two people in every deal. There's the lender and there's the equity people. We call them collectively as equity people. Both of them have returns. They want returns. You're going to invest in a deal, they want something back. So if my debt is at 6% and my investors want 6% cash on cash, if my property generates 6%, guess what? I'm good. That's even leverage. But if my debt is at 7 and my cap rate is still at 6, guess what? That investor's not getting 6.
Yeah. Yeah.
He's gotta give up some of his money and give it to the lender.
Yeah.
That's negative leverage. Now investors don't like that. Now you're less than what the market requires. Most investors want 5 to 6% on a multifamily deal, and right now the lenders want 6. So if you're buying something right now at a 4, that's a problem. Now, change the clock a little bit, go back to 2021. Everybody was buying at 4.5, 4.5, 5 because the rates were so low. And they thought, well, I'll plan my exit at maybe a little bit higher cap rate. They didn't plan their exit at 200 basis points higher, right? 2% higher cap rate on the exit. So now they got stuck. They didn't generate enough new income to offset that. Right? I mean, if you think about it, if you divide by a 4% or divide by a 6%, that is a massive change in value.
100%. You got it. Yeah, no, and I think for the listeners out there, that's a really important is to have a formula when you're looking and making decisions. And so you have a formula that you follow that's helped you. Are there any scenarios where you are like, okay, this is breaking the rule, yet I'm going to proceed anyways? Are there any exceptions when it comes to your rules?
Oh, there's always, I mean, yeah, there's nothing absolute in anything in my
Yeah.
mind, but real estate. So would it depends. So maybe I'm in Florida. Maybe this thing is so far under market in terms of rents that, remember, I know my markets, right? And I just know that the moment I take over, income is going to change dramatically. Well, so now would I be willing to go for some negative leverage? Yeah. Why? Because I think I'm going to earn my way out of it really fast, but I
Yeah.
have to have a very high conviction. So yeah, every one of these rules get broken. I mean, I remember back in 19 or 20, I watched a guy buy a deal at like a 3 cap, and I thought, "How on earth are you gonna make money?" Well, he raised rents like $1,000 a month because
Yeah.
they were ridiculously low. The 3 cap didn't matter, it wasn't on real numbers, and he made a killing on that deal. So, you gotta take everything into account, right? It's not that cut and dried. So, my guiding principle, though, I start with is even leverage in 2 to 300, and then if I'm gonna adjust off of that, I gotta have a good reason to do that.
Yeah, and it's a really good conversation because we'll have brokers or other operators ask like, what cap rates are you buying at? And it's like, well, yeah, so X, but like we're actually looking. Our main thing we want to find out what kind of upside, what kind of lifts are on these rents, and where's the value add component. And so that's where at the end of the day we can be flexible on that cap rate because that at the end of the day, if you nailed it, if from day one you can verify and look through all the comps and know you can get higher rents. Well, at the end of the day, that's going to allow you to hit your numbers. So it's like, how do you slice the bread up? It's like as long as you get to the same there's different ways to kind of slice up to get to the same result, right? So really good
Mhm.
conversation on that. Okay, so let's keep going here. So you went full exit on a few deals.
Mhm.
When did you learn the power of hiring great people? So 45 people right now.
Yeah.
Um, Tell us about, the first hire, and then what made you say, okay, I'm going to keep scaling up and bringing talented people on to get to 45.
Yeah, so it actually went very flat for a long time, and then it kinda spiked. Let me tell you, um, so the first 10 years, we grew up in Cleveland, the business did. Our back office still in Cleveland, and so most of the stuff we bought was older and tougher neighborhoods, and what happens is you settle. I'm not saying all of our early employees were bad, but you couldn't get a super high quality person to work at a property that was not in a great neighborhood. I mean, they just won't do it. So what happened to us is and this happens, I think, to a lot of people looking back. They settle a little bit because they're just happy, kind of happy to get someone to do most of what you need given the environment you're providing for them. Now,
Mm,
this went on for a while. I'm being as transparent as I can be. What happened then was the life cycle of somebody in my chair typically goes from lower quality to higher quality assets. As we improve the quality of our assets that we were buying, then we could really improve the quality of the people because now they would be willing to
mm,
come and work in that environment, right? And so we build out our property management business, and then and it was used to be me. I raised all the equity. I did everything myself, right? I'm sure you've seen that. But then as you continue to grow, you get higher quality assets, you can hire better people. And now I have somebody else that takes care of most of the investor conversations. I have someone else who talks to people about the education side of our business. Now I'm building a legitimate business because it's separate from me, right? I'm
mm,
still at the center of it, but it's not me trying to juggle 26 different balls at one time. So that probably happened maybe 5 to 8 years ago, something like that. It kinda trends, and, now I will tell you the last 2 deals we closed were brand new, right out of new lease up. We've got them at almost a 6 cap, distressed sellers. We raise the money now in advance, right? You're familiar with syndicators who find the deal, then raise the money. Well, we flip that around because that's a really hard way to do deals. And so now we raise the money up front, then go to the market and say, okay, we've got money raised. And that allowed us to even buy higher quality assets because now we're real, right? When you have 10 or
mm,
$15 million in the bank, brokers will give you deals that they wouldn't have even considered you before. So now you can see everything is now improving. And what happens is the graph, if you watch a graph, it kind of goes like this. I mean, we're at the point where it is clearly turning up because we're able to now duplicate my efforts and everything else that we do. Give an example. Our management team's managed over 16,000 units over the years. We just announced today we've 110 days without one single resident. Now we manage right now about 1,400 units. Not one resident has called our corporate office to complain about something.
mm.
Think about that, right? So you can see over time when you scale, you're an entrepreneur, you got to scale your
Yeah,
business, you got to build that foundation, and that's what we've been doing. And now we're getting the benefits of all that.
that's amazing. And you've taken this step out to really, I mean, I remember my very first hire back, this is back in like 2009. And it's scary hiring that first person, right? It's like, oh, you know what? Okay, if I don't hire somebody for, 6 months, it's going to save me this amount of money. And, that kind of mindset there is how a lot of, maybe a lot of listeners are thinking.
Yeah.
And, once you take that step and you realize, wow, it's not a cost, it's an actual investment. And there's also on the other side, a lot of listeners that have already scaled up and they have, a lot of employees. And it's like when you go down that pathway and you see and you get really great people working with you, it's hard to ever go back, right?
Oh yeah. No.
And start doing everything on your own. You realize like, wow, like there's a reason why
Mhm.
a lot of the larger companies can scale because they bring people on and allows the leader to be able to do more of the leader stuff that they need to be doing, right?
Yes.
Uh,
Yeah, you're not wrong. That's the thing that most I don't know that most entrepreneurs realize. When you start off, it's you. You're doing what you do because you're good at it.
yeah,
And then as you grow, now you bring on people. The problem is they don't start out as good at doing what you do as you do, right? You're the best at it. So
yeah.
now what happens is you now flip your energies from being the person doing all the work to now developing people. So you literally become now as you know, you become responsible for others' success and others' development. And when you flip that mindset, it's up here for people. For me, it was when I flipped that mindset. That's when a lot of things changed because now it's my job to make the pie bigger. And when you do that, when good people know that they have opportunities, if they come with you, the good people will come.
Mm,
And so it's start now you're developing them, right? Our joke around here is, I'm always gonna push you out of your comfort zone. And you're in turn gonna be pushing me out of my comfort zone. So we start pushing together. And as soon as you get a group of people acting that way, it explodes because now what you can accomplish is off the chart.
yeah, 100%. And when people are growing within the organization with you, they want to stay around and they want to, just being part of that culture, right? It really attracts then other people that are growth minded as well. So it's a real win. So now, from a overall 45, can you tell us a little bit of what the company actually looks like from different departments and how you've structured the company? Because this is like really, I think, interesting for a lot of the listeners. It's like, how do you scale a real estate investment company, right? And what
Yeah.
does that actually look like? Because there's a lot of listeners out there that be like, you know that'd be great to be full-time real estate investor. So what would kind of an org structure look like?
Yeah. So we mirror a private equity firm. We are a private equity firm. So what does that mean? Think about private equity. They have the private equity firm itself that resides up here. That responsibility is for raising money, for finding deals, and managing those assets, right? Now, think of all of the properties that we own. I'll put it in private equity terms, portfolio companies.
Mm,
Each one is a portfolio company that you are managing, and so now the group now taken together, see, nobody thinks of it this way, but that's what we are. We're a private equity firm and we're vertically integrated. Most people that do what we do, they don't want to manage their own stuff until they
mm,
get to some point. I will tell you that a massive part of our success is the value add, our SOPs, our processes. I mean, 110 days without a complaint, that's a big deal. Right? We're focused on the right things. There's no communication lag. It's very seamless. So that's the org chart, right? So let's think about a property. We have property manager, we have leasing people, we have maintenance people. That's the structure on each property. Then over that, now we're up to the firm itself. We have a regional manager, and then we have various departments. We have our back office that runs really well. We have our capital raising team. We actually also do education. If you want to do multifamily, we can help you figure that out. That whole education arm serves a number of purposes, the least of which is a lot of people that learn with us invest with us. So it's actually and also a source of a lot of investors. And then the last piece, so we have capital rate. Oh, and we have the acquisitions piece, right? How do we bring in those deals? That's exactly how we're structured, and that's exactly how a private equity firm is structured. And then in terms of the money, we our fees are very, very low. Most indicators are like 2 and 20, right? 2% acquisition, 2% disposition. So we're at one. We're one across the board, but an 80-20 split. So most of the money in this business should be if you do well, you get your performance bonus. It's no different than a private equity firm. That's exactly how we're structured. So, and it works. And what it does is it gives us, remember, we now manage, I don't know how many properties we have, probably 15. We manage 15 different little portfolio companies because they're
mm.
all different. They all have employees. They all have different issues. They just happen to be apartments. And then we have all this other stuff that we're managing up here. So it's pretty hard to get bored in our world because you are managing so many different pieces of the business. But now, as you raise more money, acquire more assets, the whole thing just grows.
It's so well said. You're really you're a company that's buying businesses, even though they're properties. You nailed it. It's like every property has its own business. It has its own P and L. It has its own cash flow. You know, it has its own balance sheet. At the end of the day, it's like you just look at the numbers, and the goal is you got to increase EBITDA, just like in a business, it's EBITDA, but in the multifamily space, it's the NOI, net operating
Yep.
income,
Yep.
right? And so it's interesting when you start looking at that, and then that's where all these business principles come into play, right? Like the Jim Collins could do great books and building leadership
Mhm.
teams and management teams, and
Mhm.
I love how you explain the breakdown of it for the listeners. Now, I'm curious for you as the leader now, Ken, what would be your kind of your main day-to-day responsibility? Because you got 45, people that, there a lot of them are doing the day-to-day. What do you think your most important, we'll say, responsibilities are in day-to-day activities as the leader of the company?
Yeah, now it's mostly marketing and promotion. It is, and it's looking at deals. It's the marketing and promotion stuff because we attract investors. The more we're on fund number 6 now, and we're raising that now. The more capital we bring, the more deals we can buy. So it's about that whole promotion. So in our like, think about what Warren Buffett, right? People love Berkshire Hathaway because of what Warren Buffett has been able to do, right? They know Warren Buffett. He's kinda out in front of that even though he's not flashy. I'm certainly not, but we're doing the same thing. He's buying businesses, so am I. I'm not saying I'm Warren Buffett, but my point to you is his role is very similar to my role, right? And you look at some of the people that do what we do, it's that person at the top that is kind of that. So I am proud to tell you, my daughter's just started working for us at in her mid 20s, like 27, 26, 27 now. And, now I'm able to build in a succession plan and that we're starting down that process. So,
Yeah, that's great. When family, I have three boys. And my oldest is 17 now. And, it's like, what's he going to do moving forward? And so he's like, yeah, real estate. I'm like, well, okay, you can go this direction and this direction. And definitely, I think real estate is a great spot. But, there's a number of different places you can go. But, I have, a lot of friends as well. And they're like, my goal is that, it's a family business and you grow it to that level. It's interesting because for us, we have a business up in Toronto, real estate brokerage side, and I told my brothers when they came on a number of years ago, I said, "Hey, listen, like I know you're coming on, but you have a Faris. Faris is your last name, and the thing is that the standard is actually going to be higher for you. It's not going to be lower because you're a Faris, because everybody's going to be watching to see how I treat you, and so like there's really high standards that we all have to live up to here." And
yeah,
so
you're right.
yeah, I mean, it's not always easy, right, when it comes to family and keep
No.
having high standards and whatnot. But man, when it works out, it's been one of the best blessings as well. So I love it that your daughter's coming in as well.
Yeah, so when she got out of college, she went to University of Kentucky. She went to work for a private equity firm for 4.5 years.
Yeah,
And it was, when your kid's in high school, you can't imagine having, uh, the kind of discussions that the moment she went to work there, all of a sudden she saw what I did. She
yeah,
saw it. They're doing exactly what we do, and we would talk for hours on the phone and talking about this part and that part and this part and that part, and then she realized, she's like, Dad, I can actually have a massive impact on this company." Meaning ours. And, she's like, I would really like to come work." Now, I didn't pursue her. That's
yeah,
the important thing, right? So many people try to get their kids into the
yeah,
business. I'm like,
yeah. That's
"No, you
good.
go. You go do your thing. Get out of here. I'm gonna do my
Yeah,
thing."
yeah,
And then see if they come back. And, that's interesting. Her experience now has been so valuable because she's
yeah.
got the private equity firm she came from I think they had raised $5 billion. So she brought a lot of life lessons with her and will help us in a big way. I just thought I'd share that because
Yeah,
it's really
no,
cool when it's your daughter.
I 100%, and I think it's a good thing that they get out into the real world, and they get to see, one, I mean, gain experience like your daughter. That's wonderful and a very relatable experience
Mm.
as well. But then when they go out, it's interesting. She connected the dots, and I've heard that same story over and over, where it's like they go out to the world and they look back on the business, and they're like, that you've been working on your whole life. You're like, I get it now. What, like, wow, what a great business, right?
Yeah,
So it's
yeah,
cool she connected the dots there, and
I did.
that's exciting. Moving forward. Um, so you've raised a lot of capital through the years, and I think for the listeners, that the idea of raising capital is, for some it's like, well, that's scary, and like, how would you even do that? I mean, you've raised at this point, you've raised the numbers here. We're looking at 60
Six
million
60, yeah, yep, yep.
60 million dollars raised. So what like advice, if there's we'll say investor, and they'd like to maybe start their own, whether it's real estate, private equity companies, or just, they want to start a business. What advice would you have for them to be able to start, from ground zero, and then to scale up to, 60 million in capital raised?
So to raise the money, here's where it starts, in my opinion. Number 1, you have to build the trust of an investor. Well, there's only one way to do that. They've got to understand that you know what you're doing. So I told you we have a whole education side. We need you to start with the underwriting. We need you to understand this business at a very detailed level. I've yet to hear one very successful person tell me that they were successful. They had no idea what the details were. They had no idea. I mean, that just doesn't happen. So you've got to start with the details. And here's why, because now when you're talking to an investor, they're going to actually ask you questions. At least they should. And when they do, your answer needs to be real. It needs to be relatable, but you need to be able to tell them why you do what we do. Like every single thing that happens in our company, nothing happens by accident. It's for some reason, right? Something happened. We've had a problem. We fixed it. We put a process in place. And this is why we do things the way we do, right? So building trust is about knowing the details. The second thing you have to do is now figure out, how are you going to see, in our world, everybody knows that you can make a lot of money in real estate, right? I don't have to cross that burden, right? They just, most people know that you can make a lot of money in real estate. So I don't have to deal with that. If you're starting a new business with a brand new idea, that's our hurdle that you're going to have to get over. And that is learning now how to pitch your idea, your concept to an investor. We still do it about the property and the location and why this deal and all that. But if you're talking about a brand new idea, solving a problem that doesn't that maybe people don't know they have, or you've got to be able to articulate the problem, help somebody understand the market and why it's there, why it's a big enough market to go after, and then how you're going to solve that problem. See, that whole piece of it, I don't have to deal with it much because it's multifamily. But if you're looking at starting your own business or raising money for just your business, you've got to be really, really good at that. And then you start to figure out how to do that pitch. Just look, if anybody really wants to raise money, go watch Shark Tank, right? Because those guys are brutal, and somebody is raising money, and you don't see. I'm told, I watch Mark Cuban a lot. I'm told they're sometimes an hour plus with that person that gets whittled down to 7-minute segments or something, and they're in the weeds with them, right? They start off with a high level pitch, get with the goal of getting them to raise their hand, right? Oh, one of the sharks is interested. And now they'll start asking questions. They pull you into the weeds because now they're trying to figure out if you know the weeds. If you don't know the weeds, you're toast. They'll throw you out. It's no different with our investors,
Yeah.
right? Get them to raise their hand, get them interested. Then let them pull you into the weeds and then answer their questions thoughtfully. And you're going to develop the trust. Now, in our world, we have people that'll follow us for a couple of years. We do a lot of free online webinars and investor updates, all that kind of stuff, because they got to see me. They want to see me. They're looking for the crack in the foundation, right? And so that's the other thing. You got to just, if you're going to do it like we do it in multifamily, multiple deals, you got to have that staying power. You got to be willing to commit that time because those people are going to watch you. They're going to stalk you. They're going to try to figure out if you're real because they're looking for the shyster in you. And eventually they're like, okay, it hasn't shown up yet. I like this guy. Now they're like, I'm in. I'm in. I like this guy. I trust this guy. I understand what he's doing and why, and so on and so forth. So
Mm,
that's kind of how the process goes. And I try to differentiate between how
yeah.
we have to raise money and how you raise it if you're a business person.
Yeah. It was so well said, 100%. And I think a lot of entrepreneurs out there when they start, whether it's real estate or business, it's this idea that, it's this online social, it's like an overnight success. But the reality is, I mean, you and I both know that it can be grueling when you have an
It is
idea,
grueling.
you set the vision, and then you start moving, and then you hit a wall, and it's like what's really helped me is to just know when the wall comes because it's coming. It's part of the journey. There's walls along the way, and you just need to figure out how to get over it, around it, through it, under it, but you're not stopping, right? And I think that probably the number one skill set I think for entrepreneurs and real estate investors are definitely included in this is like the resiliency to keep on going. It is it's talked about a little bit, but I think that the importance of going back at it, learning, and then going back at it again and going back at it again and again and again, and that's where it comes, like what you were saying, the staying power I think is like such a great piece of advice that you may not, your first investor you speak with, they may not, agree with you on that. But if you keep on talking about your idea and you keep taking steps towards it, eventually you're going to find somebody. And then from there, if you do a good job, they'll talk. Right. And I think that at the end of the day is like, it's a matter of just showing up every day and taking steps towards it at the end of the day is going to make the main difference.
One of the things that's interesting about my transition over my long career is in the beginning, and I watch other people do this, you come across a problem, and in your mind, you start to perceive every problem is a thing that is going to take you down. This is it.
Mm,
This is it. I'm
yeah.
done. I'm
Yeah.
not gonna be able to this, I'm done. I'm done. I might as well wave the white flag. What happens over time is you realize, wait a minute, you have to become these are not walls. These are not mountains. They're problems. And every problem has some solution. It might not be the best one, but you start to realize whatever comes at you, it's just a problem. And
Yeah.
if you can learn how to solve problems and not paint yourself into these little boxes, into these little corners, and just say, look, there is no limit to what I can do. I just have to solve the problem. There's no guardrails. I just have to figure it out, right? I'm not saying you shouldn't do anything illegal. I'm just saying
Yeah.
that once you realize that you can solve all these problems, now more momentum because you start to become
Hmm.
less scared, right? I've
Hmm.
learned watching people do this, a lot of it's up here. I did it early on. I limited myself. I didn't understand what it would be like to, buy a $30 million deal. I didn't understand what it would be like to, have a couple of, right? You just can't believe that you're going to go there. And the people that push through that a little bit at a time, all of a sudden they look back and they realize, I'm there.
Yeah.
I'm like now they realize, "Oh, why should I stop now?" John Maxwell, I'm sure you've heard of John. He has a little saying I heard him say one day, and it has stuck with me. People wanna do what you do, but they don't wanna do what you did.
Mm.
And if you look at
Yeah.
all the little things you did, you nailed it. Every little thing. You're just taking baby steps, inch by inch by inch by inch by inch, and eventually those inches turn into feet, which turn
Mm.
into yards, which turn into miles. The next thing you know, you're like, "Wow, look at what we've done."
Yeah.
That's the thing that entrepreneurs need to be ready for, I believe.
Hmm. Oh man, it's so good. It's so
It's
good.
John saying it's John saying, I have to give him credit for it, but it's clearly resonated with me.
Well, and it's interesting because the deals. When I remember buying our first 8 bedroom rooming house when I was 17, and then now buying like 100 unit plus deal. Like the reality is that uh, the resiliency and what things mean, that it's changed as you've grown as a person. And so this is where I love how you position when there's a problem that comes up, don't put yourself in a box. Don't paint yourself in a box that this is the end game. The reality is you can overcome anything. It's
Mhm,
just what's the solution for this. And when I think about the guys that have done, we'll take a guy like Donald Trump, okay?
mhm,
Highly, you either love them or you hate them or whatever.
right.
But the point is that man, has he ever thought big through the years? He started, and he's
Mhm,
done massive deals, and now he's taken on the presidency. But when you see a guy like that, and if you put him and you put him on the problem, whatever problem you think is going to end your life or whatever that is, if
mhm.
he had that problem, he'd probably look at that and like, that's nothing. Like that's not a that's really
Yep.
unfazed, right? Is because he's so used to taking on these massive big challenges. And I think that's actually a very wise thing, is to reframe the things that things mean to you in a way that serves you, and don't paint these pictures of meaning of like this is the end game. And I think as you start doing more and more, you get, I guess, more resiliency and understanding that, oh, you know what, everything really can be worked around and there's a solution for everything. I think that's really good counsel.
Yeah, it's what's worked for me. That and studying people, really studying people, not superficially, but study people that have been successful. It doesn't matter who they are. Like Donald
Yeah.
Trump's a great example. Half people hate him, half people love him. It doesn't matter. There is a lot to be learned about studying that person's
Yeah.
life.
100%.
But problem is people get so emotional they
Yeah.
can't do that,
Yeah.
right?
Yeah.
But it's no different than Oprah Winfrey
Yeah.
and LeBron James, and I mean, you everywhere you go, when you see those successful people, if you study them,
Yeah.
you're gonna take something away. It doesn't mean you need to be them, right? That's the mistake everybody makes. They start to go act like that person. You can't do that. You just gotta learn the lessons like, "Wow, what did they do? How did they do that?" Like, when Trump was, what did he say? $1 billion bankrupt or whatever, right? His life should be over, but he figured out how to get through it, right? Somehow he figured out how to get through it. And that's the thing, right? You'll figure out whatever problem you have. I dealt with the 08, 09. We got through it just fine. It sucked. Trust me. I didn't say it didn't suck,
Yeah.
but what doesn't kill you makes it a lot stronger. Nothing will kill you if you just push on, and you just got to have that mindset and go find the solution. If the solution isn't up here, then you go find people, smart people like yourself, and say, all right, whoa, help me figure this out. Because the other thing I learned, the most difficult thing in the world is to give yourself advice, because you're in it. You're in the weeds. You can't. Sometimes you're in the forest. You have no idea east, west, north, south. You don't know, but you go ask somebody else, and it's so obvious to them. Just make sure you got the answer, and you'll get through it. I'm telling you.
Yeah, that's great. Great encouragement. Now, just before we get into rapid fire, my question to you is: what investment advice would you have for the listeners? Say they're looking at a deal, or they, real estate overall, and they're looking at something. Or it can be investment advice overall. What advice would you have for the listeners?
Yeah, you got to understand what you invest in. Like, I don't do the stock market because I don't have time for it. I don't understand it. It makes me mental. Feels like a casino. Now, other people will say, "You just don't understand it," and they're dead on right. If I don't understand it, I'm not gonna invest in it. I
Yeah,
mean, you just gotta understand what you invest in. Warren Buffett tells you that.
a hundred
Understand
percent.
what you invest in. I understand apartments. That's why we do it.
Mm, that's so good. All right, you ready for the rapid fire part of the
Sure.
conversation?
Yeah.
All right, I have three quick questions for you, and then we're going to wrap it up.
Okay.
First question is: I'm a big reader, love reading. Which is your favorite book that's made the biggest impact in your career?
Yeah, I read all the time, actually listen all the time. Probably the most impactful for me has been some of the Cardone stuff, 10X. Every single time in my life, I thought it would take this much effort. It has taken way more, and 10X is probably an understatement. That's been the most impactful, because then it makes me realize I just got to work harder, work more. Just go after it, because guess what? Nobody else is going to go after it as
Yeah,
hard as you.
yeah. No, that's great. Yeah, when it's hard for you, it's hard for other people, which is an
Hmm.
encouraging thought, right?
Yep.
Very good. All right. Three words that others that know you best, how would they best describe you in three different words?
Yeah, I think. I hope genuine, um, disciplined, and this isn't a word, but it's more of a phrase that I've now come to really enjoy helping people come to do what we've been able to do.
So good. Yeah, very good. And then what final advice would you have for the listeners out there?
If they're entrepreneurs, I would say dive in, figure out the details, leave nothing to chance, and um, j- that's it. Just build. So if you're going to build a company, think about this. You're building a foundation, right? You got to build the foundation. Then you got to build the first story, the second story, the third story. Take the time to do that. So many times entrepreneurs want to jump up here. They get so far and then the whole thing implodes on itself because they don't have the basics down. So just take the time to be disciplined about how you grow your thing. Like step back for a minute and say, okay, this is what I want to do. What are the steps that I need to do to get there? Most people don't do that. They dive right in and then they don't have any direction. So that's going to be my advice because it's served me really, really well over the 27 years we've been in business.
Love it. Well, this has been so insightful. Just a great overall conversation, Ken. For the listeners that want to reach out to you, connect, and learn a little bit more about your company investing with you, what's the best way they can do that?
Yeah, just go to kripartners.com. That's kripartners.com. And just we got a ton of free stuff on our website. I would avail yourself of it, get to know the multifamily business, and then figure out how it fits in your life. We can help you do that if you reach out to us. So just go to our website, kripartners.com.
Amazing. Ken, thanks again for coming on the show. It's fantastic.
You bet. Thanks for having me, man.
Right on. Well, thanks for listening, guys. If you like the show, you can go ahead and share and subscribe to the channel where we're building a community of up and coming entrepreneurs. And if you are interested in learning a little bit more about real estate, go to fulloutinvesting.com where our 10-step full out investing process is. And you can go to fulloutinvesting.com to get that. And just remember, last thought, the fastest way to build wealth is to grow your business and invest in real estate. I love you guys.